Alright, good morning then folks. We head into European trade on Friday the 17th of November as pretty much for the most part the chop continues post CPI on Tuesday. You can see Asia stocks sit on weekly gains as yields oil fall. Obviously speaking about yields falling off the back of inflation the other day, slugging oil prices, help with the inflation outlook. Getting oil prices down is a contributing factor to also then in turn getting inflation down. Apart from that, you talk about cheap yuan catapults China, the second biggest trade funding currency. Talk about yuan being a funding currency, talking about new safe havens in emerging markets. It's kind of opinionated pieces, but nothing really as to why markets are up, why markets are down. It's just a lack of fresh fresh headlines to kind of drive prices. I mean, Xi and Biden have met over the last number of days. Bloomsbury were talking all day yesterday about it being making China more investable, but China's stocks don't seem to agree with that. Following disappointing Biden Xi meet, property weakness. Economic data again out of China was negative this week, and I think they've come to the conclusion, markets have come to the conclusion that they spoke about a few things about working on AI and improving relations between them, but it doesn't actually result in anything meaningful, I don't think. But apart from that, you can see here one of the main headlines on the foreign exchange bit is the Taiwan dollar. Kind of tells you all you need to know about fresh headlines to drive markets, which is relayed in charts. I mean, you can see a slight bit of positivity in European and US equities, but the highest amount any of these are up is 0.3%, so not exactly doing a lot for us in the overnight session. The Hang Seng down a couple of percent. Obviously, Chinese stocks aren't enjoying themselves over the course of this week. Commodities relatively positive, bond yields slightly lower. Kind of most of the globe slightly lower. Commodities higher. I mean, none of them are higher by any sort of big percentages. Oil 0.2% higher, gold 0.2% higher. Bitcoin and Ethereum are less than a percent higher, and that kind of risk sentiment analysis. US dollars mixed across the board. Even the currencies that are up, not exactly up by much. Ones that are down, not exactly down by much. The Australian dollar is pretty flat. The Kiwi dollar pretty negative in the overnight session. That's the real mover in the overnight session. Japanese yen slightly positive, but ultimately you just got a lack of direction across all of the financial markets. You can see the Aussie just chopping sideways post CPI. Kiwi post CPI, you can see back here it kind of popped higher. You can see, let me change this back to the hourly time frame. You can see the pop higher from the Aussie, Kiwi, Euro, Sterling, wherever you look across the US dollar pairs, but just kind of a chop sideways to grinding lower. It's just a bit of a pullback. Kiwi grinding lower. Dollar Swiss no direction. Dollar CAD had a little bit of an inverse head and shoulders and popped out of the high yesterday, so that's the one with a bit of direction post CPI, but that's just a remove against the CPI print from Tuesday. Euro dollar sideways, cable sideways, a little bit of downside off the back of some negative retail sales, which I'll have a look at when we get around to the economic calendar. But sterling lower across the board post 7 a.m. data this morning. Dollar yen down, then up, then back down again, now chopping sideways. Here's an article here: Japan not targeting specific yen level and deciding when to intervene. Government official, that's what they'll say, but I guarantee you, I'll bet my house on it, they have a level in mind that they will not want dollar yen going above. But if they can get dollar yen to go lower a bit more naturally, that's obviously what they will want. They will not want to spend loads of money and go piling in and do it that way. Obviously they want the US dollar to just weaken naturally. Dollar index, bit of a chop sideways. Equities, just a chop fest. You can see the S&P, the Dow Jones, the Nasdaq, the Russell all chopping sideways. Small caps took a bit of a hit yesterday, but not exactly a massive amount. The DAX won with a bit of clear direction. Post CPI has just continued to trend higher, which was maybe a bit surprising. But I'm talking about the last few weeks. Maybe European stocks are a bit more of an attractive proposition than US stocks, for example. You've got interest rates in Europe a full percent lower than the interest rates in the US, and they're also probably closer to cutting interest rates, which again, is that good right now for European stocks? No, but it does make for a little bit more of a more positive outlook going forward. Kind of 6-12 months in the future, maybe 12 months in the future, I would suggest maybe it probably does. So kind of makes sense as to why the DAX will be higher. Euro stocks not really following suit. FTSE all over the place, higher to start the week, lower to finish the week, now back higher off the back of weak retail sales. So it's just kind of markets are a bit all over the place. Yields kind of lower post CPI, had a pullback. Now we're back at the lows. Be interesting to see if we can break through these lows. I mean, we're clinging on to a good support level on the 10-year. If you have a look at that, down at 4.30, if you can break through that, obviously has implications across markets. Weak dollars, long stocks is probably where you would suggest markets will go if that level was to fold. You've obviously got a similar sort of level, a little bit further away on the 2-year, but 4.8 or 4.815 is the level to keep an eye out on that. Oil lower. I mean, oil inventories continue to rise, continue to build. OPEC's exports are down, not off the back of increasing production, where their exports are now down, but they are down because they're pumping more barrels of oil. The exports are just down. No adjustments from their quotas and nothing. The exports are down month over month basis. And the fact that their exports are down, it's obviously driven by weak demand. So weak demand for oil plus stockpiles building is negative for the price of oil. And oil got hammered yesterday. We're looking at it when the kind of pit trading hours in oil start at 2 o'clock. It's got whacked. It's down a couple of dollars within an hour, and then another couple of dollars within the next 3 hours. So solid move lower on oil. Gold did pop higher in yesterday's session. They were the two movers really of yesterday, and they have been the two movers post. Whoops, I did not mean to do that. They are the two movers post CPI that have kept markets entertained over the course of this week. Retail sales, you can see consensus 0.3%. So you're expecting growth, growth in consumer spending above that, obviously minus 1.1%, consensus 0.3. So it's supposed to be a figure building, a positive figure on those previous figures, but actually further weakens to minus 0.3. So bad figures all around from UK retail sales, excluding fuel, month over month, consensus 0.4, actual minus 0.1 retail sales in total year over year, consensus minus 1.5, minus 2.7, which is obviously a reason for some solid downside in the price of cable. And obviously sterling then follows suit with that. You got inflation a little bit later on out of the Eurozone, 2.9%. It's obviously a more normalization of inflation, which again rules out the need for the ECB to continue hiking interest rates. That is a final figure though, so not likely to shake markets up too much. You got a raft of speeches out from the US this afternoon. Got some housing figures at 1:30, but ultimately Tuesday was the main day of economic data with these weak CPI prints. That has driven markets, certainly on that day, and really driven markets too much post that. But ultimately, we don't have too much to go off for the rest of the week on the calendar. So it might be a little bit of a quiet close to the week. We'll hope that it's not. We'll hope for a bit of action across the European session and the US later on. But obviously, there's no guarantees as to whether that happens or not.